Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for GDX. So back to the technical analysis. Today we're down 68 basis points on the 1 hour chart. We are now approaching to negative MACD. As for the 4 hour chart, we are coming off of overbought RSI, and we saw a divergence in the past few hours ago or yesterday, and we may see a divergence on the 9 moving average onto the 18 moving average. As for the daily chart, we are encountering temporary resistance, which is around the price of $34.70, so we'll mark that as our immediate resistance. As for support, if we do manage to fall lower, we do expect to see a possible decent support around the 18-day moving average, this purple line, and that coincides with around a price of $30. So that also coincides with previous resistance, and since we're above resistance, that acts as our support. So if we do manage to climb higher, and that price movement is roughly around, let's see if we expand out further, that price movement is roughly around, let's see if we can expand further. That price movement is roughly around, I would say, 3.8% to the upside, and to the downside, it is around, I would say, 10% to the downside to the next immediate support. But as for the day-by-day probability model, again, this model is now available in the link below, so do check it out. As we progress to the 7th day, we have a 38% chance for gold miners to climb between 0 to 5%. On the extreme case, we have a 15% chance for gold miners to climb between 5 to 10%. On the other hand, we have a 31% chance for gold miners to fall between 0 and negative 5%, and a 15% chance for gold miners to fall between negative 5 to negative 10%. So let's head to the day-by-day forecast for GDX. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. So on the line graph, we compare the two graphs. Right here we have our current trend, and overlapping it is the trend that I believe is the best match. And this trend dates back, or we have the current trend right here, and below is the trend that I believe is the best match, and this trend dates back to June 1st to August 27, 2012. So let's point out why these two charts are similar. So we have start off at the upper Bollinger Band, touch the bottom Bollinger Band, revert back to the mean to the middle Bollinger Band, and once more we touch the bottom Bollinger Band. And as we make a reversal, we stayed at the middle Bollinger Band, and then to the upside we touched the upper Bollinger Band. So now the trend in question, we start off at the upper Bollinger Band, dip down to touch the bottom Bollinger Band, revert back to the mean to touch the middle Bollinger Band, and then finally we reach to the bottom Bollinger Band once more, and then stayed at the middle Bollinger Band temporarily, and then we see a nice reversal to the upper Bollinger Band. So what we have here is 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points on the current trend. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So the model that we just examined was June 1st, 2012 to August 27, 2012. Back then, gold miners was up around 4.5%. So if we head back to the day-by-day probability model, that coincides with this standard deviation. We have a 38% chance for gold miners to climb higher between 0 to 5%. And if we examine the technical performance of each model, this is our current model that we are in now. We are down 1% from monthly high, up 43% from monthly low, up 5% from 10 simple moving average, up 14% from 20 simple moving average, and up 22% from 50 simple moving average. And now the trend that we just examined, it was down roughly around 2% from monthly high, up 13% from monthly low, up 2% from 10 simple moving average, up 4.7% from 20 simple moving average, and up 6% from 50 simple moving average. There's one technical difference that we have here is the monthly low is much higher on the current trend. Compare that to the trend that we're in now. So the trend we're in now is 43% up from monthly low. Compare that to the trend that we just examined was 13%. So do keep that in mind. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.